Hello, and welcome back to the channel. I'm Algabot, and in every video I break down a single automated trading strategy for MetaTrader 5 so you can understand exactly how it thinks. Today we're studying an expert advisor called Pivot Momentum Breakout. It blends two classic ideas, the objective support and resistance ladder of floor trader pivot points, and the relative strength index used as a momentum filter. By the end of this video, you'll understand how it identifies a level break, why it asks momentum to confirm that break before acting, and how it manages each trade structurally from one pivot to the next. This is educational analysis only, so let's get into it. Let's start with the big picture. Pivot Momentum Breakout is a breakout-style expert advisor, but with an important twist. A raw break of a support or resistance level is a famously noisy signal. Price pokes above resistance, traders get excited, and then it quietly slides back. This strategy is designed to filter out many of those false pokes by asking a second question before it acts. Is there genuine momentum behind the move? To do that, it leans on two well-known tools. The first is the pivot point ladder. Every bar, the strategy rebuilds an objective set of levels from a rolling window of recent price. It calculates a central pivot, a first resistance and support called R1 and S1, and a second resistance and support called R2 and S2. These are simple, transparent, and non-repainting, which means the levels are fixed before the breakout bar is measured against them. The second tool is the relative strength index, used here purely as a momentum gate. The strategy doesn't treat RSI as a simple overbought or oversold reversal signal. Instead, it wants RSI to confirm that a break is being driven by strength, that this strength is still rising, yet that the move isn't already exhausted. The average true range, or ATR, plays a supporting role. It sizes the stop buffer so that the protective stop adapts to whether the market is calm or volatile, and that helps the same settings travel across different symbols. So who is this style of analysis built for? It suits a trader interested in structural, level-based breakouts who wants confirmation rather than chasing every move. By default, the strategy is framed around a liquid foreign exchange major or an index on the 15-minute through 1-hour charts. Remember, all trading carries risk, and losing trades are a normal part of any approach. Nothing here is a recommendation. This is for educational purposes only. Now let's walk through the exact logic, step by step. On every newly closed bar, the strategy first rebuilds its pivot ladder. It looks back over a rolling window, 96 bars by default, and finds the highest high, the lowest low, and the closing price of that window. From those three numbers, it calculates the central pivot, then R1 and S1, and finally R2 and S2. Importantly, the window ends on the bar before the breakout bar, so the levels are already fixed when the break is judged against them. Next comes the long setup. The strategy detects a long opportunity when the bar that just closed is the first to close above R1, meaning the previous bar was still at or below that level. On its own, that's just a break. So three more conditions must agree. The breakout candle must be bullish, closing above its open. The RSI must be above its bullish threshold, 55 by default, signaling momentum is present. And RSI must be reading higher than it did one bar earlier, confirming that momentum is still rising. There's also a guard. RSI must stay below the overbought level, 75 by default, because an already exhausted break tends to snap back. When all of that lines up, the take profit is placed at the next pivot up, R2, and the stop loss is set just below R1, on the idea that broken resistance often flips into support. That stop is buffered by a multiple of ATR, so it isn't sitting right on the level. The short setup is the exact mirror. The strategy signals a short when the just closed bar is the first to close below S1. The candle is bearish. RSI is below its bearish threshold, still falling, and not yet down into the oversold guard zone. The target becomes S2, the next pivot down, and the stop sits just above S1, buffered by ATR. Finally, two filters protect the entry. A minimum reward to risk check, 1.2 by default, rejects any break whose target is too close to justify the structural stop, and a spread cap blocks entries when trading conditions are poor. The strategy also holds only one position at a time per magic number, letting the structural stop and target manage the exit. Let's read through the code as it would appear in MetaTrader. At the top are the inputs you can adjust. Session bars is the rolling look back. 96 bars, used to build the pivot ladder. RSI period sets the momentum gate, with RsiBull and RSI defining the band that momentum must sit inside. StopBufferAtr scales the stop using the average true range. MinRewardRisk sets the minimum reward to risk of 1.2, and max spread points blocks entries when the spread is too wide. Now look at the long block. The condition reads almost like plain English. The previous close was at or below R1. The breakout close is above R1, and that candle closed above its open, so it's bullish. Then RSI now is above the bull threshold, below the overbought level, and higher than the prior reading, so momentum is present and still rising. When that's all true, the stop loss is set just below R1. The take profit is placed at the next pivot R2, and only if the reward to risk passes does trade.buy send the order. The short block is the mirror. The previous close was at or above S1. The breakout close is below S1, and the candle is bearish. RSI is below the bearish threshold, above the oversold guard, and lower than before, so momentum is falling but not exhausted. The stop sits just above S1. The target is the next pivot down at S2, and trade.sell submits the order once the reward to risk check is satisfied. Both sides share the same structural logic, simply flipped. Let's bring this to life on the chart. On screen you can see our candles, the horizontal pivot ladder drawn across them, and the RSI panel underneath. The dashed lines from top to bottom are the next pivot up, the R1 resistance, the central pivot, the S1 support, and the next pivot down. Watch how price interacts with that ladder. We begin in the middle of the range, drifting around the central pivot. The first two candles ease lower. RSI is muted in the high 40s, and there's nothing to act on. Then the third and fourth candles start to push up. Notice that on the fourth candle in the RSI panel, momentum climbs above the bull threshold of 55 and keeps rising, while staying well below the overbought guard at 75. Now look at that fourth candle on price. It's the first bar to close above the R1 resistance line, and it closes above its open, so it's bullish. Every condition agrees at once. A fresh close above R1, a bullish candle, and rising momentum that isn't yet exhausted. That's where the buy entry marker appears. The protective stop is placed just beneath the R1 line, because broken resistance is now expected to act as support, and it's buffered a little by the average true range. The take profit is set at the next pivot up. From there, price runs in our favor. The fifth, sixth, and seventh candles march higher, each one building on the last, with RSI pushing into the low 70s but holding just under the exhaustion zone. On the seventh candle, price reaches the next pivot target line, and the take profit marker closes the long trade right at that structural objective. That's the core idea. Enter on a confirmed break, ride it to the following pivot. Now the market turns, and this is where the short mirror plays out. The 8th and 9th candles roll over, momentum fades back down through the central area, and RSI drops out of bullish territory. On the 10th candle, watch the RSI panel again. Momentum falls below the bear threshold of 45, still falling, but not yet into the oversold guard at 25. On price, that 10th candle is the first to close below the S1 support line, and it's a bearish candle closing beneath its open. The conditions mirror the long exactly, so the sell entry marker appears. This time the stop sits just above the broken S1 line, since former support is expected to act as resistance, again with an ATR buffer. The target is the next pivot down. Price then slides through the 11th and 12th candles, momentum easing toward the high 20s, until the 14th candle reaches the lower target line, where the take profit marker closes the short. In both trades the structure did the work. An objective level break, a momentum confirmation from RSI, a stop placed beyond the broken pivot, and a target at the next pivot. And remember, the strategy only accepts these trades when the distance to that target clears the minimum reward to risk of 1.2. Of course, not every break behaves this cleanly, and losing trades are a normal part of any method. This is an illustration for educational purposes, not a prediction. So that's Pivot Momentum Breakout. We looked at how it builds an objective pivot ladder every bar, how it waits for the first close beyond R1 or S1, and how it uses the relative strength index to confirm that real, rising, but not yet exhausted momentum is behind the move. We saw how it targets the next pivot, places its stop beyond the broken level with an ATR buffer, and filters trades by reward to risk and spread. Everything here is educational information only and not financial advice or a recommendation. If you found this breakdown useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and let me know in the comments which strategy you'd like me to study next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.